Hey everybody, Preston Bryn here with our weekly roundup brought to you by our trader user group. This is for the trading week ending, holiday shortened week ending April 13th, Thursday, 2017. Well, it was a really interesting week, and I think as a lot of people saw, a lot of traders were taking on hedges to possible downside action over a long holiday weekend, primarily due to geopolitical risk by that nut job out in North Korea. Um, and it seems to be building, but it goes in fits and starts. Now he's got his grandfather's uh, um, birthday celebration coming up Saturday. That would be tomorrow. And everybody's expecting something out there. And as I tell all my members, everybody in most other countries, when they have birthday celebrations or any kind of celebration, they, shoot fireworks or some people in some countries shoot guns in the air. North Korea shoots missiles. Anyway, what we're looking at on the screen here is the E-mini S&P 500 futures. I've got a lot of lines on this screen, but the ones that I want you to focus on are just a couple of key things here. If we look at this, you can see that we have broken the symmetrical triangle here. You can see this line just like this. It's kind of running like this, right? We broke it right here. And we also broke the 50 EMA as well. And I told our members that the 2317 area is going to be a key area because that was a low that we made back in last week. But if we take that out, then 2300, which is kind of where I said we're probably going to end up as the first real test. It's a psychological area. It's also a 1.5 Fibonacci extension off prior major pivot highs and lows. And that's kind of where I see things can get held up a little bit. Okay. Now, the other thing that I'm looking at here is if you look off on the left-hand side of the screen, you can see this volume over price. Okay. And this volume over price is kind of centered in these two areas right here. One area is around 2360, and then the other area is centered here around 2340, roughly around that area there. Or I'm sorry, 2240. That would be 2240. Okay, so these areas here, and you can see this is where buyers and sellers were duking it out, and sellers really control this area of turf up here. And down in this area where buyers and sellers were duking it out, buyers control this area of turf here. So we've got this range that we're probably going to be fighting in. Okay, now this break right here on this symmetrical triangle, right, as I kind of outline it right here, you can see this symmetrical triangle. This break, traditionally, the just pure technical analysis called for a break to the upside, but I told our members we're probably the odds favor a break to the downside. Okay, generally we approach the triangle from the bottom left up, so in a bullish fashion, and then when you enter into this triangle, it's kind of an elongated triangle, then the odds favor a break to the upside, but not a lot, but just a slight edge. But I instructed our members that I believe that we're going to break to the downside, and that's where we are. And then, of course, if we take out the 2317, we're going to quickly come down to this 2300 area. We'll have a little bit of a fight there. You'll see at this area, there's not a lot holding us up here. You can see most of the volume right here is very weak, right? Not a lot of volume in that area. So I do believe the sellers will drive it down. The momentum will drive it down. And then the next big test is around this 2240 area. Now, we will get a little minor test in this area here because there is a congruency of pivots and fib levels, but we'll see how this thing shakes itself out. Okay, but I think the first really big test is around 2240. And notice that the 2017 open price is at 22, right at about 22, just a little bit under 2240, right? So we've got a real interesting area here. This is actually is 2263, right? So right at about 2263 here. So we're in this area here that I could see next week getting down here very easy. What would be the catapult to really just push the market over the edge and get us here quickly? If we have, let's say, a nuclear underground test in North Korea, and then, you know, we get some interesting things out of Trump here. I do believe the next step with the U.S. government, if they do something like that, will not be military action, but it'll probably be sanctions and tougher sanctions. And if Trump's smart, he'll get China and the UN to back him on that, just so he's got some wind at his back, and then isolate North Korea more. But no matter what happens, because you and I and everybody out there could spitball all the various scenarios that can play out. That's not our job, okay? Our job is to play the price action and where it goes. And as I said, that's where it's pointing right now. I mean, if I clear everything up on the screen here, so let me just take some of this off here and just clean it up for you just a little bit here, and then just draw in a couple of these lines. And these lines came in really very nicely. I mean, if I draw it like that, you'll see here that it's just been adhering to this line. Now, obviously, I didn't draw it very straight, but that you can see here, that's kind of where it was. And it actually, in fact, why don't we just do it this way, Brent? That would make it a lot more sense, wouldn't it? So let me actually put in the line here. And if I just kind of show you guys this trend line here, right? And then let me just put this other one down here like that. I mean, it really is a very good solid line that it adhered to. And as I said, here is the volume over price right in this area right here. And then here is the bigger volume and price right over in this area here, right? So right in this area here, it's around 22, let's call it 22.62, okay? And then in this area here, 23.60. So it's about, from that area to that area, roughly about 100 E-mini handle points, right? And we're sitting right at that level right there. So we're in the upper quartile, but I think we can get down here very quick, okay? There is a minor support point, as I said, right around the 2300 area at the 1.5 fib level. We took out the 50 EMA, but this is where we're going, right? The other thing is, as you can see here very clearly, it's defined the trend. That was the high made right there, and then we've got lower highs as we're coming down. And then we've got lows and then lower lows. So really, what we're really trying to do here is we could possibly, if we take that out, right, which is around 23.17, then we're making lower lows, and that's the definition of a trend. We've got one touch and two touch there, and then there is a 1 and a 2. So it really takes 2 to start to establish this trend, and we've got 2. We got 2 lower highs and 2 lower lows. So this is going to be a key element for us coming up on Monday and Tuesday, just where we go. So if we get some more turmoil over in the Asia Pacific area, then clearly the prices are going to come down. I think we're going to test 2300 fairly quickly, and then we could go down even more, okay? And we'll probably come down to this major area right here, which is also a 1.38 extension off the prior major pivot highs and pivot lows using the fib levels. And then you can also see the buyers won out down here versus the sellers on that volume over price. So we've got a whole lot of support down in this area here. Let's see where we head up. Now, I've told our members that this is still a buy on a dip. And that means that I don't expect a very large pullback. I mean, a dip really is anything less than 10%. Once you get over 10%, it's considered a correction. And then once you get over 20%, it's considered a bear market. Now, can we get to a correction? Sure. If we get some more geopolitical risk and the earnings come out not quite as strong as people are expecting, or the profits, because we're just kicking off earnings season right now, then we can get over 10%. I'm not expecting that right now. It looks like earnings will come in fairly good. At least that's the prognostication from the previous reports that analysts are putting out and what companies are saying. We kicked off Thursday with Citi and Wells and JP Morgan. JP won or beat, and then Citi and Wells didn't do so hot, and it kind of dragged everything down. But as long as the yield curve stays relatively, and by the way, the yield curve's been descending all year, getting flatter and flatter. And the flatter it goes, the worse it's going to be for banks. They make their money on net interest margin. And when that goes down, then guess what? Banks suffer. And you cannot have a good, strong bull market when banks are suffering. The financial sector needs to catch wind. So this is number one. So I'm seeing this setup here. If we take a look at the Dow, the Dow has a very similar setup here. We also broke the 50 EMA. We also broke the Dow upslope and trend line, and we're coming down to some major area right here too. You can see it's almost like these two are in sync. Here is the volume over price right here, and you can see here again buyers versus sellers, and the buyers won out here, right? And it's sitting right at the 2017 open price. And even though we got to an all-time high up here in late February as we kicked off March, March has really been a slow degradation of price coming up to the month of April. Okay, we got a good strong start, but now things are going in reverse, but we're making lower highs. And we've established a key pivot low right there with the Dow as well, which we're testing right now. If this breaks, we're going to come down to this area down here. All right, so that is the Dow. Very similar. And then, of course, if we look at the strongest index that is out there year to date and really the best performer, which is NASDAQ. Okay, if we look at NASDAQ, we're closer to the 2017 highs. We had some divergence trades, and we had some, you know, I was instructing our members that I suggested a pair trade where we're picking up puts in IWM and picking up calls in the Russell, and it turned out fairly good. But now we've got a key test coming up here with the NASDAQ futures. Remember NASDAQ futures, this is the 100 largest companies in the NASDAQ, which would be the big ones, right? The big tech companies. And those are the ones where value has seemed to have been very strong. But there was a big fight up here in this area up here. And there was a lot of profit taken. And you can see all of that massive volume here. And there's still a fight on, and we haven't determined who's going to win this fight, the buyers or the sellers. Just a huge amount of volume. And then you can see down below, not a lot, right? Not a lot. Right in this area here. I mean, up here, I mean, I extend the line over. You can see this line here, just how far to the right, and the volume, the amount of volume that's taking place at these price levels right here is tremendous. And that means there's a lot of changing hands. That means there are people unloading some and just taking some profits and setting ourselves up. Okay, now if we break the 50 EMA, you can see a little bit of a support area here, but if that breaks, guys, there is not a lot of volume down here, all the way down to this area here. That means, you know, the shit's going to hit the fan, because if NASDAQ gives it up, that's really the strongest index out there. If it gives it up, then all the other ones are going to turn south and run. And then the small cap, which is the Russell. You can see the Russell is actually outperforming the others, even though we're making lower highs. And we've got this series of lower lows over the past, you know, since the 20th of March, we've been basically steady state. We've been up and down, but we haven't established, like those other indexes, a downward trajectory. Remember, the others have got a downward trajectory. This one is more sideways. So I'm looking for this to show areas of strength and hold up. Now, keep in mind that on Friday, we actually went, you can look at this and see right here. Let me just adjust the screen a little bit so that you can see a little bit better. You can see right here that we actually went into the red for the year. This is the 2017 open price, 1360.30. That's where we closed today, or on Thursday. We actually went into the red. Now, we were in the red before for almost a week back in the middle of March, and then we climbed up. But you can see here, still we're making lower highs, right? And we're making lower lows as we come down. And it's a big fight. And if you look at this and buying versus the buyers versus the sellers, it is a natural peak, and it's kind of like a crescendo that it stops right in this area right here around the 27 open price, 2017 open price, all right? And it is kind of indeterminate. It looks like the sellers are starting to win out. And if we break this area here, notice how the volume just drops off dramatically. That means there's not a lot of buyers willing to pick it up down here, at least not at this time. All of the indexes, the MACD is below zero and crossed to the downside. So we're setting up, folks, for more downside action. The other thing I want to show you guys is if we look at the Dow Jones Transports, you can see here, we're coming back down again to test the 2017 lows. The transports typically lead the equity markets by anywhere from 3 to 6 months. The transports made their high back on the 1st of March. So March has not been a good month for the indexes. Yes, we're still up over double digits since the Trump election in November 8th last year. But month of March has not been as polite to the markets as it's typically been. So if we take this out and we go lower, then it does not bode well for the summer months. Remember, the summer months traditionally are sell in May and go away. Well, we've only got another 6 weeks. And then we're in, actually we've got another 3 weeks, and now we're in May. And then boom, we're getting right smack dab in the middle of the summer, which tends to be the weakest part of the year for the U.S. markets. And then, you know, so goes the U.S. market, so go most other markets globally. So we're not setting up for a good entry into these summer months, okay? And if we look at volatility, check this out, guys. Look at the VIX here. Let me find it here. The VIX closed at 1596. We went up into the yellow zone, all right? So you can see we're now in zone 2. And I was just talking about this last weekend's update, and I said, you know, we've been in the green zone, but we can expect a move higher. Now, I haven't been saying that every week because we've been in the green zone for quite some time. But once you've been in it, you know, for more than 3 months or so, you can expect these spikes higher. But the VIX closed at 1596. And if we look at the April vol futures, which expire in about 5 days, it's at 1632. So we're not in backwardation on the VIX and the April vol futures. But now if we look at the May vol futures, notice here the May vol futures is only at 15225, okay? So the May vol futures are actually lower than the April vol futures. I haven't seen this very often where we have a backwardation in the volatility futures contracts, but we do not have it participating in the VIX. And that just basically says that the markets have really priced in a lot of risk over this weekend coming up to next week. And you know, I told our members, I said, look, the markets really want to just catapult higher, so let's pick up some hedges over the weekend going into the close of the trading day on Thursday, and that's what we did, you know, just to see what happens over the weekend. But that's kind of what the volatility is telling us. And the other thing, and you can just see here with the bond market, this is where a lot of people are surprised, but you can see the bond market has now, and I left it here so I can move it and show you, the bond market made new 2017 highs. The old 2017 high was 153.31, almost 154. And if I put it on the new one right here, it's at 154.10. So we made new highs for 2017, and that was on Thursday going into the close. Now, we didn't close at the high, but pretty damn close, all right? And now this is where we're sitting here. So money has been going into the debt market, which suggests a risk-off trade. And that is clearly another sign that the markets are really concerned about risk. Now, if we look at the U.S. dollar, the U.S. dollar has been selling off of late. But I think this is momentary. I think the dollar is going to move up a little bit. I'm not ready to go a longer term short in the dollar, because if we look at the euro here, the euro is a little bit stronger. You can see this, but it's been falling hard, and I think the euro is going to go a little bit lower. But longer term, I think the euro is going to be stronger. I think the dollar is going to be weaker. But it's going to be there's going to be a lot of machinations going on in both of these currencies, and it's a little bit choppy right now. But the one that I really like is the British pound. I think the British pound And I'm not ready yet, but I think the British pound, once they get their issues sorted out for our members, we're going to be looking at this to the long side. I think it's going to be a really great trade on the British pound. Gold. Well, gold reacts as it normally does when you've got stress. Here's the move right here. Now, I'm forecasting a move in gold up to about 1307. And then we're going to run into a mass of resistance here. Now, can we punch through? Of course, but I don't see it near term. I think longer term we will, but right in that area there, no. But we've been playing gold, and we've got some hedges on, and gold's been good to us. And let's just see how this thing plays itself out. And that would be the gold market. And then in the energy market, of course, oil has been real good to us. You can see here oil is going to run into a brick wall up here. I think we're going to have a little bit of a pullback. It's going to make another run again. We may make new 2017 highs, but I don't see us holding that through the end of this year. I think oil is going to be stuck in a 10-point range from the mid to low mid 50s to the mid 40s, right? I think I kind of see that happening here. And we looked at nat gas as well. Nat gas is the same way. A little bit of a pullback here. We've got some seasonal tendencies both in the nat gas and the oil energy market. And if you look at gasoline futures, you can see here gasoline futures is stronger than all of them. And there is no divergences on here. So I think any dip here is probably going to be bought. So that just means, you know, and we're coming up to the seasonal period of the summer driving season. So I can see there's a little bit of lift in that. We're doing some things in the ag market. Nothing in the meats, and then in softs we got some things, and of course we got some stocks that we're playing as well. So folks, this is kind of how I see the market right now. I imagine we're going to know the outcome. North Korea is about 11 hours ahead of us. Not quite 12, I don't think, but 10 to 11 hours or so. So when you wake up Saturday morning, you're going to know if they fired off or did some underground tests, and there'll probably be some action on that. But that was one of the reasons why volatility is accelerated like it's accelerated. So this is where we're sitting right now as we come into this next trading week. Again, just to reiterate, I think the momentum is still going to carry us down a little bit more. We haven't fallen that much, guys. If you really look at it, and we got the high here at 2401, and we look at the current price of the E-minis, which was 23.27, roughly, right? That's about 74 points off of the 2401 price, which is about 3%. So we're only down about 3% so far. That's, to me, a good little dip is 3 to 7%, right? Or I'm sorry, 5 to 8%, somewhere in that range there. Not a full 10%. Once you get above 7 or 8%, you start to scare the children. But a nice, and this has been fairly orderly too, because volatility really did not accelerate until this past week when the issue started coming up with Korea, and then, you know, post-missile launch, and Trump showed that he's willing to pull the trigger on some of this stuff. Not since then did volatility get up into that yellow zone, meaning above 15, and really start to play a role in the markets where it hadn't played a role since the Trump election. In fact, right after the Trump election, within a day or two, vol went from the yellow zone, which is above 15, back into the green, and we've been in the green for the entire time. The remainder of November, December, January, February, March, and then part of April. And then just this past week when he launched those tomahawks, boom, we started taking on vol. And that's more geopolitical risk. So it's kind of like what I guess one of the defense secretaries said, it's a known unknown. We know about this stuff, but the unknown is whether it's going to happen or not, which means you've got to make sure you're hedged so that you don't wake up in the morning and you take it up to you know what. All right, everybody, that's our update for this week. We got some really interesting things going on in our group, our user group. If you're not a member, I highly encourage you to come in and check us out. I got some offers here associated with this link so that you can come in and check us out. We get a pretty good international group as well as a lot of folks from North America. So I will check you guys out later for our members, even though I hope you guys have a great holiday weekend, holiday Easter weekend, or Passover this past Monday. But we will have a session Sunday night, just given all the things coming up, because Sunday and what happens in North Korea, because most of the risk this weekend is geopolitical. Depending on how that shakes itself out, it's probably going to set the tone for Monday and Tuesday, and then we start having some more earnings kick in Wednesday and Thursday, and then it'll kind of set the tone going into the next weekend. Have a great holiday weekend. Happy Easter, everybody, and I will see our members this Sunday night at 8 p.m. Eastern Standard Time. Take care, folks. Ciao.